Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about this topic that has pretty much gone global. I'm hearing people that don't even normally talk about the stock market talk about GameStop stock, and that's what this video is going to be all about. I know a lot of you are probably already familiar with the situation, but considering that I am in the stock market and I have experience in the market, maybe I can add some perspective here compared to some of the other commentators out there that aren't involved in the market as much. So with this video, I just want to talk about this whole situation right now, what's going on with Robinhood, and a recent purchase that I made with GameStop stock as well, also known as ticker symbol GME. It's absolutely crazy how this one stock has gone just worldwide in terms of everybody knowing about it. Even in Rocket League, I've seen people have GME in their name or things saying like, quote, buy GameStop as their username. And I've never even seen anything like that for Tesla stock or anything. So it has just gone worldwide. It's gone mainstream. Everybody's talking about it. And with that, of course, there's always the concern of if everyone knows about it, is the top confirmed? Are we at the top? I know last time Pokimane started talking about stocks and they said top confirmed. And actually just a few weeks later with that, the stock market crashed. So there's always that concern as well when everybody knows about a specific stock or a specific asset or just the stock market in general. That's when people start to question, are we at the top? But that's another side topic as well, because there is some reasoning behind this purchase and why everyone is talking about it. And I think some people are actually missing out on this major play that is happening right now. But before we get into that, I just want to say, as always, anything that I say in this video or have said already is not to be considered financial advice. This is me just simply sharing my thoughts and opinions about GameStop stock, the stock market, and just what I'm doing in the market. This is not a recommendation to buy GameStop, especially considering how much it has run up so far. That would be super risky. People could end up losing like 90% or higher with their investment. That's just on one hand. I want to make sure that is known because this is super risky, especially considering that with my logic with investing, I'm focused on those long-term plays, buying stocks that I can pretty much hold for 10 to 30 years and be satisfied with the price at that point when I sell. I just want to make sure to mention that this is a very risky play and I could pretty much end up losing everything with this investment that I made. But getting right into this one, basically if you're not familiar with the situation, people noticed on WallStreetBets, that's a big community on Reddit where people make Yolo plays. A lot of the times it's pretty much like a casino. Everybody is making crazy bets on stocks, and many times we see people losing hundreds of thousands or millions of dollars on WallStreetBets, but everybody joins together in camaraderie regardless of whether they're making money or losing money. It's kind of like a brotherhood where everybody insults each other and makes fun of each other's losses and things like that, but at the end of the day they all enjoy talking about stocks in the market and just making jokes and making investing fun. A lot of the times it isn't really investing, it's just YOLO plays. But WallStreetBets figured out that GameStop was a heavily shorted stock in the stock market, the most shorted stock in the stock market, and that hedge funds had overextended themselves and shorted more GameStop stock than in existence. They took note of that and then realized if people bought shares, it would put pressure on those short positions, especially if a lot of retail investors bought a bunch of shares. What ended up happening is that so many retail investors and maybe some institutional investors as well started to pick up some GameStop stock. A major figure in this whole situation is DFV, also known as Roaring Kitty on YouTube. He realized that GameStop was kind of undervalued and he took on a value investing perspective to this whole situation, and he realized the opportunity in taking advantage of that low share price considering how much it was short and just considering the fact that he believed it was undervalued. And I even went back to his post on Reddit. He was talking about this way back in 2019. People were roasting him, making fun of him. He pretty much brushed all of that aside and said, wait until January of 2021. And as we know now, he is the legend of WallStreetBets. He's made multi-millions of dollars and still hasn't sold his full position yet. What ended up happening out of all of this is that so many people bought GameStop stock that it cornered all of these shorts and put them in the worst position possible, to the point where they ended up doubling down, I believe, and they have to cover some of those short positions because of leverage and margin and things like that. And that's why we saw Citadel get involved with Melvin Capital as well. Citadel is related to Robinhood. They're a customer of Robinhood, and that's where it really gets interesting. I won't go too much into that topic, but it is kind of a shame what has happened with Robinhood, with us not being able to buy GameStop stock or just being limited on only one share as of right now, I believe. We'll get to that in a minute as well. But they put put so much pressure on this short position in these hedge funds that they've already lost billions and billions of dollars. And the play here and what WallStreetBets is really focusing on is the fact that so many people that have bought the stock, if they simply hold on to it and they don't sell their shares to whoever the shorts are to cover their positions, then it will only drive the share price up even more as they have to cover their positions at even higher prices. This is actually a pretty smart play in my opinion, and I think people are discounting it as in everybody's just overpaying for GameStop stock, that it's not about fundamentals anymore, and it actually isn't about fundamentals anymore. This is like a blue moon scenario where it's really not about the company, it's about the position that the shorts are in, to where other investors can put pressure on that position because they have overextended themselves, and this is something that should not happen. It wasn't a very smart move on the hedge funds part, and at this point it just seems like those investors that took note of this, they're taking advantage of them being in that weak position. Some people are simply buying GameStop just because they like it, others are buying it because they know what position the shorts are in. I think that's mostly why people are buying this stock right now. Maybe early on when GameStop was under $100 or under $50, people were just buying it because they like the company. A lot of this is coming from fear of missing out, but then again, when we think about this, this is still in play, and although this is a very risky play, it's not something to just discount in terms of reasoning that people are just buying this stock because the share price is going up. Now, in basic terms, that's what a lot of people are doing, but if we get into some actual reasoning as to why this is happening, it's because people know what position the shorts are in, they know what position the hedge funds are in, and they're taking advantage of it by buying the shares and holding them because they know they can get a higher price by holding on to it, forcing that price upwards, and then selling it to the shorts later on because they're in a bad position and they have to recover those losses. Don't get me wrong though, there's a lot of people who are simply just buying because number go up. It reminds me of like the Bitcoin chart where it shows the IQ chart and the dude on the right's like 150 IQ and it says hodl, and then on the left side of the chart it's like 50 IQ and it says number go up, and then in the middle it's like a mad dude crying where he's like, no, this can't happen. It's one of those scenarios where it almost works in symbiosis with the people who don't really understand what's happening and they're just looking at the number, and those who do understand what's happening with a short squeeze. So there's a big commonality between those two, even though the understanding is very different. At the end of the day though, this is all about the retail investor's choice. Everybody is making their own decision on whether they would like to buy the stock or not. Some people are buying alternatives like AMC, Nokia, BlackBerry, and things like that, but really the focus is on AMC because it has been the most shorted stock. It was at over 100%, and that puts the shorts in a very bad position if things don't turn out well for them and they have like a swan event like this. I wouldn't say black swan because this has actually turned out well for retail investors, but this is one of those scenarios where the hedge funds got a little bit too complacent, too comfortable. They thought it was just the end of GameStop and they would just short it into bankruptcy, but retail investors and some other investors as well realized this time what position they were in, and they pretty much took advantage of it. Like I said, some simply bought GameStop stock because they believed in the company. Others understand what's happening with this whole squeeze right now, and I think that's what's important. That's one of the reasons I'm buying this stock right now. It's really the only reason to purchase this stock at this point in time because I personally don't believe that GameStop is worth $300 per share right now, considering everything going on. I do believe that it was undervalued at that point in time where it was like under $5 per share, but at this point in time, the only reason I could justify purchasing this stock would be for this short squeeze. And that's where we get to my position currently, where I recently bought around 12 shares of GameStop stock on Thursday, and we're currently in the negative just a little bit because of that after hours movement at minus 4%. As you can see, today's return for Friday, that was plus 61.16%. That's plus $1,480.13. And then for the total return, we are currently at minus 2.50%, minus $99.87. Not a bad loss at all right now, but basically this was a $4,000 investment on Robinhood margin with an average cost of $320 per share, and this is around 12.5 shares, which takes up around 1.1% of my portfolio. Full disclosure, once again, I just want to emphasize this. Not only is buying GameStop right now just very risky in general, but especially buying it on margin, basically borrowing money to buy GameStop stock, that is very, very risky, and you could end up losing everything and then owing that money to Robinhood at a 2.5 interest rate until it is paid off. So I know this is certainly certainly a risky situation. I could end up losing this whole $4,000 and owe that at an interest rate. A total Wall Street Bets move. I know I YOLO'd 4K on Robinhood margin for GameStop. I mean, that's pretty much just a joke in itself. If somebody would have told me 5 months ago that I would do that at this share price currently, I'd probably just laugh because it seems like a total Wall Street Bets move. But with this play, I'm completely focused on the short squeeze. Keep in mind, I could sell this at any point in time. I have no idea when I'm going to sell it. I'm just going to go with my gut instincts on this one. But I'm not a gambler. I'm not somebody who goes to the casino and spends a lot of money. If I go with my friends, I don't spend much at all just because I know that I can invest that money, and I just end up wandering around with a drink or something and watching everybody else. So this is pretty much my Vegas money right here, and I know that I could lose it all, but the gain potential is very high as well, and I think that's where the payoff is at. The upside to this, if it does turn out well temporarily for me, and if I sell at the right point, I can actually make some really good gains, I think, but on the downside as well, I could pretty much lose everything. As I stated earlier, we would get onto this topic about Robinhood limiting purchases, which I'm not a fan of at all personally. I'm really disappointed with this decision, and I've already moved $1,000 to Fidelity if I decide to make another purchase in the future, because there's no limit on buying GameStop or whatever stock that I'm interested in. And I think Robinhood is going to lose a lot of business for this because they're all about, quote, democratizing finance, and their name is Robinhood, so they're supposed to be about the little guys and the people like us, the retail investors. But sadly, we have the situation here where purchases are being limited, as the title states, changes due to ongoing market volatility, and it continues stating, opening new positions in the securities listed in the table below is currently allowed but limited. For more context about the decision to limit these securities, read our blog post. Continuing, it states, are there limits to increasing my existing positions? And then says, yes. The table below shows the maximum number of shares and option contracts which you can increase your positions. Please note that these are aggregate limits for each security and not per order limits, and include shares and options contracts that you already hold. These limits may be subject to change throughout the day. And then here we have the symbols. AMC, you're limited at 10 shares and 10 option contracts. BB, BlackBerry, that's 700 shares, 700 contracts. EXPR, 20 shares, 20 contracts. GameStop, 1 share and 5 options contracts. I'm really disappointed in that. I think that's just a shame that we can only purchase 1 GameStop share. I actually tried to buy, I think it was either $12,000 or $14,000 in GameStop stock on Friday on margin. I know that's absolutely crazy. However, that was when I had the rude awakening and realized that there was a limit on buying GameStop. Next up, we have ticker symbol GNUS. That's 600 shares, 600 options contracts. KOSS, 2 shares and then not available for options. NAKD, 600 shares, not available for options. And then NOK, Nokia, which is 2,000 shares and 1,000 options contracts. Like I said, I'm really disappointed in this, and I think Robinhood is going to miss out on a lot of potential customers. Even though trading is free, they still get revenue from Robinhood Gold and margin that I think they're going to be missing out on a lot because of this decision. At the end of the day, in my opinion, they should just let people buy what they're going to buy. If they end up losing money, they lose money. If they end up gaining money, they gain money. But just let people make that decision. Let us have the free choice to do that. I just wanted to share my recent move that I made with GameStop. I know it's absolutely crazy, so I know people are going to be like, what in the world are you doing, man? But I just wanted to have the transparency here. And keep in mind, with these transparency videos, I know that I could show you all a position or a play I'm making, and it could either turn out well or I could lose pretty much everything. So I do put a lot on the line by being transparent with you all in terms of the outcome. So I have transparency on whether I make money or lose money in the plays that I'm making. So if you appreciate that, please make sure to smash that like button. But like I said, especially, I just want to emphasize once again, I am not recommending buy GameStop or anything like that. This is a very risky scenario. That's all up to your personal risk tolerance and your own decisions and your own perspective. But I just wanted to share what I was doing with the market and explain some things a little bit and why people are buying this stock right now. But anyways, hope you all enjoyed this video. Definitely feel free to take advantage of my referral links to Robinhood or Webull, especially Webull right now. You can get 4 free stocks in total, and you can buy some of these stocks that are limited on Robinhood, and it also helps support the channel, which I really appreciate. You can also take advantage of my referral link to Coinbase, in which you can get $10 in Bitcoin for buying $100 worth of Bitcoin, and you get the opportunity to get a bunch of free alternate cryptocurrencies that you can convert to Bitcoin. I think it's around $40 free, so it's totally worth it in my opinion, because I got that $40 and then converted it instantly to Bitcoin, and now I have that in my portfolio as well. So it's pretty nice to take advantage of that and the 4 free stocks with Webull. But I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.